Discover the untapped potential in distressed debt investing as Howard Marks reveals the biggest opportunity of a lifetime. Welcome back to No Money, where we bring you insights and discussions on investment strategies and opportunities. In today's video, we're going to delve into the world of renowned investor Howard Marks and explore what he believes to be the biggest opportunity of a lifetime. Howard Marks, the co-founder and co-chairman of Oaktree Capital Management, is known for his unique investment philosophy and successful track record. Let's dive right in and discover what he has to say about the current investment landscape. Introduction to Howard Marks. Before we get into the biggest opportunity, let's briefly introduce Howard Marks for those who might be unfamiliar with his work. Marks is a highly respected investor and author, known for his insightful memos on investing. He has navigated various market cycles and has a knack for identifying valuable opportunities. His investment approach is centered around risk management and capital preservation. With this background in mind, let's explore his perspective on the current market. Number 1. Understanding the opportunity. Distressed debt investing, as highlighted by Howard Marks, presents a significant opportunity for investors. This approach involves acquiring the debt of financially troubled companies at discounted prices. Marks emphasizes the importance of thorough research and analysis before investing in distressed assets. By carefully assessing a company's fundamentals and potential for recovery, investors can make informed decisions. Timing is crucial in this strategy, as economic downturns often result in attractive buying opportunities. Patience is key, as investors must be willing to hold on to their investments until the market recovers. By understanding the dynamics of distressed debt investing and having a long-term perspective, investors can position themselves to potentially capitalize on the undervalued assets and generate substantial returns in the future. Number 2. Market timing and patience. Howard Marks emphasizes the significance of market timing and patience in distressed debt investing. He advises investors to exercise caution and avoid rushing into acquiring distressed assets without thorough analysis. Marks believes that during periods of economic distress, the market tends to overshoot, creating attractive buying opportunities. However, he cautions against impulsive actions and encourages investors to wait for the right moment. This requires patience and a long-term investment horizon. By exercising patience, investors can avoid making decisions based on short-term fluctuations and instead focus on acquiring distressed assets at discounted prices. Marks believes that successful investors in distressed debt understand the cyclical nature of markets and are willing to wait for the eventual recovery. By practicing market timing and maintaining patience, investors can maximize their potential returns in the long run. Number 3. Risk management. In the realm of distressed debt investing, risk management plays a critical role. According to Howard Marks, he advises investors to approach this strategy with caution and emphasizes the need for thorough research and understanding of the underlying risks. Marks suggests conducting extensive due diligence on the distressed company, including analyzing its financials, assessing its competitive position, and evaluating its prospects for recovery. Additionally, Marks highlights the importance of diversification to mitigate risks. By spreading investments across multiple distressed assets, investors can avoid excessive exposure to any single company or sector. This diversification helps protect against the potential failure of individual investments and minimizes the impact of adverse events. Furthermore, Marks urges investors to be mindful of the inherent risks associated with distressed debt, including potential defaults, operational challenges, and regulatory uncertainties. He advises investors to consider both the potential upside and downside of each investment and to have a clear exit strategy in place. Number 4. Contrarian Thinking. Contrarian thinking is a key aspect of Howard Marks' investment philosophy in distressed debt investing. Marks believes that the biggest profits are often made by going against the herd and being willing to invest when others are fearful. He advocates for a contrarian mindset that challenges conventional market sentiment. During times of economic distress, market pessimism can create opportunities for investors to acquire distressed assets at discounted prices. Marx advises against succumbing to fear and instead encourages investors to have conviction in their analysis and take calculated risks. Contrarian thinking requires a deep understanding of the underlying fundamentals of distressed companies and the ability to identify value where others may not. It involves conducting thorough research and analysis to uncover undervalued assets with the potential for recovery. By adopting a contrarian approach, investors can position themselves ahead of the crowd, taking advantage of the eventual market turnaround. However, Marx cautions that contrarian thinking requires discipline and the ability to withstand short-term volatility. Number 5. Learn to interpret company information correctly. In distressed debt investing, Howard Marks emphasizes the importance of correctly interpreting company information. Marks advises investors to dig deep into a distressed company's financial reports, industry trends, and competitive landscape to gain a comprehensive understanding. Interpreting financial statements accurately is crucial to assess a company's financial health, debt structure, and potential for recovery. Mark suggests looking beyond surface-level metrics and examining key indicators such as liquidity, leverage ratios, and cash flow patterns. Additionally, understanding industry dynamics and competitive positioning enables investors to evaluate a distressed company's prospects for long-term success. Analyzing market trends, customer behavior, and competitive advantages provides valuable insights into its potential for turnaround. Marx also encourages investors to critically evaluate the quality and reliability of the information they come across. This involves considering the credibility of data sources and cross-referencing information to ensure its accuracy. Number 6. Distinguish between luck and skill. Distinguishing between luck and skill is a crucial element in Howard Marks' investment philosophy. Marx believes that while luck can play a role in short-term outcomes, long-term success in investing is primarily driven by skill. He emphasizes the need for investors to critically analyze their decision-making process and evaluate whether their successes are a result of skillful analysis or simply favorable outcomes due to luck. By acknowledging the distinction between luck and skill, investors can avoid overconfidence and complacency. Marx encourages investors to continuously improve their skills through education, experience, and disciplined decision-making. Developing a deep understanding of fundamental analysis and market dynamics can help investors differentiate between luck-driven gains and those achieved through skill, enabling them to make more informed and successful investment choices in the realm of distressed debt and beyond. Number 7. Know the probability of incurring a loss. Knowing the probability of incurring a loss is a vital aspect of Howard Marks' approach to investing, especially in the context of distressed debt. Marx emphasizes the importance of assessing risk and understanding the likelihood of experiencing losses. He advises investors to conduct thorough due diligence and analysis to evaluate the creditworthiness of distressed companies and the potential for adverse events. By understanding the probability of incurring a loss, investors can make informed decisions and allocate resources accordingly. This knowledge allows them to assess the potential downside of an investment and implement risk management strategies effectively. Marx encourages investors to be realistic about the inherent risks involved in distressed debt investing and to have contingency plans in place. Furthermore, knowing the probability of incurring a loss helps investors set realistic expectations and avoid irrational decision-making based on short-term fluctuations. It enables them to assess potential rewards against the associated risks and make calculated investment choices. In conclusion, Howard Marks believes that distressed debt investing presents a massive opportunity for investors who possess the necessary patience, risk management skills, and a contrarian mindset. By identifying undervalued assets and conducting thorough research, investors can potentially generate substantial returns over the long term. We hope you found it insightful and informative. If you enjoyed this content, make sure to like and subscribe to No Money for more investment-related discussions. Remember, investing involves risks, and it's crucial to conduct your own research and seek professional advice before making any investment decision. Until next time, happy investing.